Welcome to Talk Tickers, where we break down the earnings calls that move markets. Today, we're digging into El Pollo Loco's Q3 results. And this one, well, it's a bit of a head-scratcher. We've got a story of really solid performance clashing with a pretty rough market reaction. So if you just listen to the management team on the call, you'd think everything was fantastic. The CEO, Liz Williams, was talking all about the great momentum in the business, how proud she was of the team, reinforcing the strength of their strategy. A really positive picture. But then you look at the market, and it told a completely different story. The stock got hit, selling off pretty sharply right after the numbers came out. So what's going on here? Why the disconnect? All right, let's get into it. Okay, first things first. Let's break down the headline numbers that caused all this drama. So here's the core of it. It's that classic mixed bag, what we call a beat and miss. On the bottom line, their adjusted earnings per share, or EPS, came in at 27 cents. That's a solid beat. Wall Street was looking for something closer to 22 or 23 cents. But, and this is the big but, the top line, revenue, came in at $121.5 million, and that was a miss. And this chart really just puts that conflict front and center, right? You've got this nice beat on earnings, but it just wasn't enough to make up for that revenue miss of about $2 million. It tells you that while they're doing a great job managing costs, the sales just weren't quite there. And for a lot of investors, that top-line number is what really matters. Okay, let's peel back another layer and look at the actual operations. And honestly, this is where things look pretty impressive. Check this out. Their restaurant contribution margin was up 160 basis points year over year. That's a huge deal. It means they're running their restaurants more efficiently. Now, the flip side is that comparable sales, or comps, were still slightly negative. But you can see why management is so focused on this margin story. It's the big win they can point to. So, given this mixed picture, what was management's story? Let's get into their narrative, which is really the bull case for Loco right now. They basically laid out a three-pronged strategy. First, keep hammering on those margins, finding efficiencies in labor and the supply chain. Second, get people back in the door by stabilizing traffic with some targeted value deals and new menu items. And third, and this is a big one, they really want you to look past this quarter and focus on the future, specifically their pipeline for new store openings in 2026. And one area where their strategy is clearly working is digital. Digital sales now make up 27% of their total sales. That's up from just 20% last year. So that's a real, tangible piece of good news they can hang their hat on. And this quote from the call, it says it all. They're talking about almost doubling their development pace in 2026. This is them explicitly trying to shift the conversation. It's like they're saying, hey, don't worry about the small revenue miss today. Look at the massive growth we have coming down the pike. But as we saw from the stock reaction, the market just wasn't buying it. So let's flip the coin and look at the bear case. What are the investors worried about? Yeah, it really is a tale of two different stories. You have management over here pointing to their margin expansion, their great operational execution, and this awesome 2026 pipeline. But the market? They're looking right here, right now, at the revenue miss, the negative comps, and what they see as a really weak consumer environment. Two completely different focal points. And look, this skepticism isn't coming out of nowhere. If you look at the stock's performance over the last year, it's down 26%. While the broader market has been basically flat to positive. So investors have been wary for a while now, and this quarter's results didn't do much to change their minds. So let's nail down the key concerns for the bears. 1, that revenue miss. It's just a big red flag. 2, the average check actually declined by 1.3%, which suggests customers are trading down to cheaper items. 3, the competition in fast food is absolutely brutal right now. And 4, at the end of the day, investors need to see proof that they can actually get those comp sales growing again in a sustainable way. All right, so that's the setup, which brings us to the big question. Where do we go from here? So what's the call on Loco? With all these conflicting signals, great operations on one hand, a weak top line on the other, how should we be thinking about this stock? Okay, here's our prediction for the next quarter. We think you're going to see more of the same. Their cost controls are excellent, so we're penciling in another inline to slight beat on the bottom line on EPS. But that top-line revenue growth, it's probably going to remain tough. And because of that, we see the stock staying pretty range-bound, likely trading somewhere between $8.50 and $10. So with all that in mind, our rating is market perform. Look, the market knows they're good operators. That margin story? It's already priced into the stock. What's missing is a catalyst, and we just don't see a reason for the stock to really outperform until we get some hard evidence that sales are re-accelerating in a meaningful way. And that rating leads us to a potential trade idea for the quarter. The thesis is pretty simple. Margin strength is there, but the sluggish sales are going to keep a lid on the stock for a while. So one idea is to take advantage of the higher volatility you usually see after an earnings report. For those who already own the stock, you might consider selling some out-of-the-money covered calls. It's a way to generate some income from your position while you wait for that bigger 2026 growth story to actually materialize. And of course, we have to say it, this is not financial advice. So it all comes down to this one question. Will El Pollo Loco's excellent operational execution be enough to win back the market before that 2026 growth story finally arrives? It's really a question of timing. Can their internal strengths keep investors patient long enough for the big payoff? That's the key question hanging over this stock right now.